A lot of times you guys hear me talking about how to write off your life and a bunch of different deductions that business owners can have in their business. But another aspect of owning a business that I love is also being able to incorporate your family into your business so that you're building more wealth, saving more money in taxes faster, and you're, involving them in the business. So maybe one day they can take it over.
Welcome to Life Changing Money, a podcast all about one of the most taboo topics in the world, money. I'm your host, Barbara Strehand, and we're going behind the scenes on business owners' journeys to money, success, and wealth. Let's get started.
Hello, and welcome to another episode of Life Changing Money. This week's episode, I'm so excited because we are launching a brand new course. We're launching the Tax-Free Family course. And of course, we're going to launch it with a masterclass. And so I'm going to talk to you a little bit about how you can also have a tax-free family. And what I mean by that is a lot of times you guys hear me talking about how to write off your life and a bunch of different deductions that business owners can have in their business, like writing off your laptops and technology and cell phones and trips and all of that. But another aspect of owning a business that I love is also being able to incorporate your family into your business so that you're building more wealth, saving more money in taxes faster, and you're, involving them in the business. So maybe one day they can take it over. They can build their own wealth faster. They're learning all about business themselves. So maybe they'll start their own business one day. I know our 7-year-old already is talking about taking over the family business one day. And so I love hearing that because he just hears us talk about business all the time. And if you're doing that too, there are ways that you can involve your kids, your spouses, your parents, other family members, and even your best friends so that you can lower your profit, pay less in taxes, which is what we all want. So in this masterclass, I'm going to talk a lot about involving spouses. And there are a few different ways to do that. You can either add them as part owners in your business. You can have them as just an employee because some of us don't want to add them on as an owner in your business. And there's actually pros and cons to having them as an employee versus an owner. Or you can have them as a board member in your business. Now, for some of you, maybe you're not married or you don't have kids. So you might be like, I don't know if tax-free family is for me, but I'm sure you have some family member somewhere or even a best friend that you would love to incorporate into your business to help you grow your wealth or save money in taxes too. So this will still be for you. And the same 3 ways that you can add your spouse to your business, you can do that with a significant other, with a best friend, with a parent as well. So either employee, part owner, or a board member. So let's dive a little bit into the different ways and pros and cons to adding them in one of those 3 ways. But first, for sure, if you're listening to this podcast, at the show notes below, we're going to link to our masterclass where we're going to dive into this for an hour long, answer your questions live like we always do. And so the masterclass is going to be July 24th, 10 a.m. Pacific, 1 p.m. Eastern if you're on the East Coast. So definitely sign up for that. The masterclass is totally free. And you guys know I give it all away for free in our masterclasses. I'm not one of those like gatekeepers. So sign up for the class and that will launch our course where the course will save you. It can save you over $75,000 in taxes. Like, it's crazy. It's a no-brainer. So let's talk about the different ways that you can add a spouse, or again, if it's like a boyfriend, a girlfriend, a significant other, it's kind of the same. So you can add them as part of your business. And if you do that, you're going to have the most amount of perks in terms of like writing off your life. You're going to now be able to travel together. You can add another vehicle to the business. You can double your retirement savings. The downside of adding them as a part owner is there are some fringe benefits that you're not going to be able to offer them because as owners of companies, the IRS a lot of times says any fringe benefits to us are taxable as the owners. So you might not want to have your spouse as a part owner. It just really is going to depend on your goals, what you want to do with your business, how you want to build your wealth. And so we'll talk through all the different avenues in the course for that so that you can pick your exact goal and scenario. But for example, one of my favorite things to offer in a business is called a medical expense reimbursement plan. And you might be hearing that and be like, I don't have a ton of medical expenses, so I don't know if it's really going to apply to me. But a MERP, medical expense reimbursement plan, you can expense all of your medical premiums. You can expense all your copays, your prescriptions, supplements that you're taking. I know we're all like on our health and wellness trend. So if you're taking like magnesium and iron and your omega-3s and all of that, they get pricey. You can also write off all the supplements, even things like protein powders and creatines, like if you're working out. But also, a lot of wellness things can now be a business deduction through your MERP. And that can be things like chiropractic care or acupuncture, even some massages. If they're a medical massage, then you can write those off, and even sometimes Botox. So even though you might not think first off the bat that you have a lot of medical expenses, if you went through every month for the last 12 months, it would probably add up to like another 10, 12, 20K. Even just like our family's health insurance premiums every month is like $1,500. So that's 18,000 right there without any other medical expenses. So probably if you added in like health, wellness, supplements, all of that, you could easily be at 30,000 or more for a family. And so now with a medical expense reimbursement plan, if you have that in your business, that 30,000 is essentially a business expense. If they're an employee, again, you can't do that if they're a part owner because now there's like some restrictions from the IRS because they say you can't give those benefits to an owner. They're going to be taxable to the owners. But again, if they're an employee, they're not going to be taxable. This is where all the different scenarios can get a little tricky, which is why we have a course for it. But if you have other employees besides spouses, kids, people in your family, you're going to have to offer these same benefits to other employees. Now, that could be a good or a bad thing, depending on how you look at it. So if you have a ton of employees, that could be really costly, right? Because if you're writing off $30,000 for your family, and then maybe for each of your employees, it's another $10,000, that can get very expensive and you might not want to offer it to everyone. So another way that you can do that, we can set up what we call family management companies. And if you have a separate entity and a separate family management company, you can offer these benefits through that. So it just takes another entity, some more paperwork, which of course we can set up for you. But again, this is why it's so important to talk through these things, either with a tax strategist like us, or we'll walk you through it in the course. But there's just so many benefits to having a MERP. And I think it's always beneficial to have them set up before you really think you're going to have really high medical expenses. Because if you guys have been following me for a while, you guys know I had cancer 2 years ago and I spent over $200,000 on alternative care. And I'm really glad I had my MERP set up ahead of time so that that 200 grand could be a business expense through the business. So you definitely want to set this up before, even if you think you're not going to need it. Besides having a medical expense reimbursement plan, other ways that you can create like what I'm calling a tax-free family. So let's say you use the employee route for your spouse, because again, you can have the MERP. You're going to be paying your spouse. So create a job for them. Probably all of our husbands or wives do something in our business for us, whether it's admin work or sales. Maybe they help with emails or marketing or social media or funnels or your website. There is something that they do, so you can pay them fair market wages for that. And again, any wages in your business is going to lower your profit, and so you're taxed less through your business. Then you might be thinking, well, Barbara, if I pay my husband or my wife, isn't that just going to be on a W-2 anyways, and I'm going to be taxed on it? The answer is maybe, but we can make it tax-free, of course. So let's say you pay your spouse like $20,000 for what they're doing in your business. So you pay them $20,000 for the year. Maybe they're doing admin work, helping you out with the emails. And now you can have what's called a flexible spending account. Well, a family can have a flexible spending account up to $6,000 this year. The amount changes every year, so don't quote me on that forever, but $6,000 of that is going to be pre-tax money. So now that $20,000 that you just paid your spouse is really only going to be taxed $14,000 because $6,000 of it is tax-free. You can keep layering that on. There's also dependent care FSAs. So I like FSAs, which are flexible spending accounts. They're typically used for medical expenses that you're going to use throughout the year. So this is going to be for like your massages, your acupuncture, anything not covered by insurance, you're going to use an FSA for. But I typically will use other accounts for that. And again, we go through all the different ways in the course, but I typically will use an FSA for a dependent care FSA. And these are great for anyone with kids under 5 that are in daycare, because now you're going to get $5,000 of your daycare tax-free, which I know does not cover that much. Daycare is so expensive these days. Maybe it'll cover a couple months for you, but at least you get $5,000 of it tax-free. If you have kids over 5, like we do, you can still use a dependent care FSA. It's just going to be used differently. So now they're not in daycare, right? But they might be in before and after school care. They might go to summer camp. And we all know, like, it's summer right now. Those summer camps are expensive, like $600 a week for just day summer camp. And the overnight ones like are thousands of dollars a week. So the dependent care FSA, you can use it for summer camp, but it cannot be for overnight camp. So that's the only hiccup to it. So you can easily get to the $5,000 dependent care FSA limit. So again, that's going to lower your spouse's W-2 again by another, let's say $5,000. We haven't even touched on an HSA, and you guys know that they're one of my favorite tax-free accounts. It's one of the only things out there that are a triple tax benefit. And it's a triple tax benefit because when you put the money into your HSA, and this year the limit is $8,550 for a family. So let's say, again, we're going to lower your spouse's W-2 by the $8,550. So now we're probably at a tax-free W-2 for them. But you put the money in tax-free, so $8,550. That HSA money is going to grow for you. This is where most people make the mistake. So make sure to invest your HSA money. Don't just leave it in there. If you leave it in there, it's not going to grow. It's not going to decline, but it's also not going to grow. So you need to put it in like the stock market. And so it's going to grow for you tax-free every year, hopefully, as long as the stock market goes up, which historically it's gone up every year 10.9% for the last 15 years and over 10% for the last 50 years. So more than likely it's going to go up every year. So it's going to grow tax-free. That's the second way it's a triple tax benefit. And then when you take it out later, not now, but later for medical expenses, it is also tax-free. So there's the third benefit of having an HSA. And I say later because you want to hold it in there for a few years so that it is growing for you. So again, you're going to put it in, you're not going to touch it. You're going to put it in the stock market or have your financial advisor do that. And it'll grow for a few years or even until retirement when you're 65 and you have a lot more medical expenses than you do now. And when you take it out for medical, again, it's tax-free. Or you can do what I'm planning on doing, as long as all goes well, is to not actually use it on medical expenses, but I will use it as another stream of income at retirement age. So once you hit 59 and a half, you can take the money out and it works just like a traditional IRA. So traditional IRAs, you guys know, the limit is only $7,000 a year. But now you just put another $8,550. So essentially you put $15,550 away into your IRA, even though the limit's only $7,000. So that's why I love HSAs. It'll lower, again, your spouse's W-2 for you. And a really cool thing as well, let's say this year you had like a surgery and it cost you $5,000 out of pocket. And so you paid that not through your HSA, remember, because you're going to let it grow. But in 50 years, you can reimburse yourself for the $5,000 surgery that you had this year. So like in 2075, you could reimburse yourself for your medical expense from 2025, but that $5,000 grew over 50 years to probably like, let's see, they say it doubles every 7 years. So let's say it doubled 7 times. So 5, 10, 20, 40, 80, 160,000. Your $5,000 is actually now worth 160, but you can reimburse for the 5,000. So you just made 155 grand. Pretty sweet. So again, paying your spouse as a W-2 is super beneficial. And then you'll just run all of these tax-free benefits through the W-2 so that it's wiped out. So you're not taxed on it. So these are just some of the things that we're going to run through in our tax-free family masterclass. So don't forget to sign up. The link is going to be in the show notes below. And also you can go to any of our social medias and comment family, and you'll get the link right there. So you can comment, you can DM, you can respond to a story family, and we will send that over to you. But some other things that we're going to go over in the masterclass is not only how to involve your spouse and the different ways, like I mentioned, just one of the ways of having them as an employee, but also with your kids. And you guys have heard me talk a lot about kiddo pay. And this year you can pay them $15,000 tax-free. That number is just going to keep getting bigger every year. And there's a lot of things in the big, beautiful tax bill. I didn't name it that. It's called the One Big Beautiful Tax Bill. And there's a lot of proposals in there for more kiddo benefits of paying them through your business. So once that passes, I'll go through what actually went through and is finalized, but it's just going to keep getting better paying your kids. And we'll talk a lot about involving elderly parents. There's a lot of our clients lately that have aging parents, and we all know it costs a lot of money to have them in like a home or in constant 24-hour care. And so there are ways to actually make that a business deduction in your business. So we'll go through that. And of course, involving your best friends in your business. And so all of these strategies in the masterclass, like I mentioned, it can save you $75,000 or more in taxes. So it is worth 1 hour of your time to schedule it on your calendar. Take the time out of your business to come to the free masterclass and learn how you can do this for yourself, for your family. And these are all things probably you've been wondering, but your accountant probably told you no. And it's really because they're not educated enough on the actual tax strategies. They're just worried about getting your tax returns out the door and getting it done as fast as possible, because they probably have thousands of clients that they're trying to get out the door by the tax deadline. And so that's why it's really important to be working with a strategist, where we work with you all year round on putting together these strategies that are tailored specifically to your goals, your business, your industry, and your family. And I talk about this a lot. It's more than just taxes, and it's more than just oh, screw the IRS, or I don't want to pay the government more than I have to. It's more than just deductions. It's really about freedom, because the more money that you can keep in your pocket, the more freedom that you can have in your life and with your family. And how cool would it be if you did save the $75,000? What would you do with an extra $75,000 in your pocket? That is life-changing money. So if you've ever wanted to write off more of your income, stop overpaying the IRS, or set up your family financially through your business, this masterclass is for you. Again, it's happening July 24th, 10 a.m. Pacific, 1 p.m. Eastern. And it's the only time this year that we're going to be offering it. And of course, I'll do a live Q&A at the end, because I love answering all of your questions. And I am just so excited to see you there. Thanks for listening.
Thank you for listening to this episode of Life Changing Money. Don't forget to subscribe, and I would love if you left a review and shared it with your friends. See you next time.